Nilesh Shah is with us, Managing Director at Kotak Mahindra Asset Management Company. Nilesh bhai, good morning. Great to have you with us here. Happy Vijay Dashmi and great to see you, sir. So lots happening.
Yes, every day is full of events. And as a Russian proverb said, may you live in interesting time. We are truly living in interesting times.
Maybe just too interesting, right? Maybe make it a little less interesting. Better, but Nilesh bhai, let's talk about the push from the government in that sense, right? And when I say government, I mean authorities in terms of trying to boost consumption. We got two tax cuts, income tax cut, GST cut. RBI has done 125 basis points in cut. And today, we've got another decision from the Reserve Bank of India. What is your sense, Nilesh bhai, on what the RBI does today? And on the other side of that question, if you can also tell us what have you picked up? We'll get auto sales numbers, etc. We'll get the first sense of how the GST impact is played out. So if you are able to pick out and just tell us if it's been as encouraging or what. Go on.
So Prashant bhai, we are getting squeezed on geopolitical side. The US tariff at 50% is essentially a trade embargo, especially on labor-intensive sectors like aquaculture, textiles, gem and jewelry, handicraft. We have no option but to stimulate domestic economy, which is happening via income tax rebate that was announced well before US tariff. The GST cut came. Then there is interest rate cut of about 100 basis points since the RBI started rate cutting cycle. And then there is 8th pay commission. I'm sure government is also working on finding alternate exports market, especially in Europe, where rupee has depreciated 10 to 12%. The third will be stimulating private investments, because after consumption, we need a virtuous cycle of higher consumption leading to higher investment. And that's availability of credit, lower interest rates, as well as ease of doing business. So government is working on multiple fronts to stimulate domestic economy and to find alternate exports market to ensure that the adverse impact of US trade embargo is minimized to the extent. Now, in that overall trend, there will be minor blips. Between 15th August to 22nd September, people deferred their consumption. Fortunately, in automobile, they seem to have come back with cuts. And we are seeing, a large number of selling getting reported on a daily basis. My feeling is that the August as well as September GST collection could be a little bit subdued. And thereafter, there should be recovery. So clearly, we are living in interesting time. It's important to focus on longer-term trend rather than shorter-term blips.
That's always been the message from you, Nilesh, and so good to have you with us today as the festive season really moves up the next notch. So the 9 days of Navratri come to an end, and then is Dussehra, and then we go to the grand finale, towards Diwali. But Nilesh, I want to, before we talk about other things, and we will get to that flows question in a bit, but before that, I want to get your sense on this whole buzz in the IPO market. Earlier in our careers, I'm sure most of us will agree that every time the headline index was range-bound, the IPO market would go thanda. This year, it's gone the other way, reverse. Just yesterday, I think our colleague Hormaz was telling us, over 25 IPOs just in September alone. So, what do you make of this trend? Are you happy with largely the quality of paper? Is it getting excessive? Or do you think the market has matured? Because not all those IPOs are seeing a big listing pop. Many are just completely fizzling out. So your sense on the primary market?
So Surbhi, undoubtedly, our workload has increased tremendously. And it's literally inhuman for me to expect my analysts to cover every single IPO in detail. So by definition, we have become very, very selective. We have become very, very choosy. And majority of IPO, yesterday there was a WhatsApp message circulated. All these IPOs open at a discount. And then I put it into our WhatsApp chat with the investment team. How many did we apply? And my head of research replied, sir, forget applying. We even didn't study these companies properly because preliminary we could reject them. Now, there is a class of retail investors which follow the quick money addiction habit. They all believe that 10 rupee NAV, 10 rupee NFO is a good thing to own. Similarly, they have misconception that IPO will always list at a premium and you will make money. Both these myths are wrong. But many a times people, instead of learning from other people's experience, learn by committing mistake. With the barrage of IPOs, undoubtedly, there is no worry on the quality side. SEBI has done a fantastic job on ensuring that only quality IPOs come. Institutional investors also have done a reasonably good job in ensuring that they invest in reasonably valued IPOs. Many of the IPOs which have opened at a discount had virtually no institutional participation. So my recommendation to investors, please don't make mistake on your own. Learn from our experience and go for those IPOs where you believe there is a reasonable institutional participation. And when I say institutional participation, I'm more talking about mutual funds, insurance companies, and pension funds, rather than individual family offices kind of companies.
So that's on the IPOs. The other factor of the market, and I'm just getting into the supply-demand dynamics now, is the fact that there is so much local liquidity. Obviously, there's liquidity that mutual funds are sitting on. And then the HNI and the family offices, because every time, someone's coming in selling 3-4% of their company in the market and they're sitting with this whole hoard of cash, it has to be deployed somewhere. So some of that is coming back to the market. So, at the risk of sounding very unpopular, I'm saying, is the liquidity keeping the market afloat now? Would the current levels have been very, very different if we did not have some of this HNI/UHNI/family office liquidity? And how should we expect the next couple of months to be on this front?
So I do believe there is a fair amount of liquidity with domestic institutional investors. And many a time people have told us, why don't you keep cash? Why do you have to deploy? And I have requested them that if you are so bearish on market, would you like to short Nifty for 10 years? And then they go back. Then I request them, would you like to short it for 5 years? Then again, they don't respond. Then I say, would you like to short for 3 years? Again, I haven't met anyone who is willing to short Nifty for 3 years. People are worried about 3 months, 1 month, 1 year. We are making investment for 5 years and 10 years. We are requesting our investors to have asset allocation, moderate their return expectation, and invest over a period of time, keeping some dry powder for correction. Now, undoubtedly, next 3-6 months remain challenging. The FPIs are on the selling spree. They are saying for last 5 quarters, your earnings growth is single digit. Your valuations are at premium to historical averages. And most importantly, you are getting hit by US tariff and geopolitics. They are absolutely right in saying this. But we as domestic institutional investors are saying that look at the India growth story on a 5-year basis. We might be expensive on a 1-year basis, but we are the cheapest emerging market on a 5-year basis. Now, if you are investing for 3-6 months, probably it's time to stay out rather than indulge into the market. But if you are investing for 5-year and 10-year, then this correction is a great opportunity to invest into. Now, limited point here, Surbhi, it's not that we want to give exit to FPIs. We are bidding at a lower and lower prices. But FPIs have also learned from their experience in March 20. They sold 60,000 crore without price limit. We brought Nifty index from 12,500 to 7,500. Between October 21 to June 22, they sold 4 times more at 250,000 crore, but with price limit. And market came down from 18,500 to about 16,500. So it's a tug of war between FPIs on one side, DIIs on the other side. No one wants to give easy entry or exit to anyone. Everyone is negotiating price hardly. If we were not bidder at this price, maybe they would not have sold. And if they would not have sold, maybe we would have to buy at a much higher prices from promoter. So there is a tug of war going on. Both players are smart and they are having different time horizon.
It is a tug of war, but Nilesh is saying, don't worry, we're not here to give easy exits. to anyone. And I'm sure, I mean, we have local fund managers, they're very, very smart. They're looking at whether it's IPOs, new managements, or whether, it's about valuations. I'm sure they're doing their job.
Right. Nilesh, morning. Good to see you in. Give us a sneak peek. How are the flows? Last time you told us, have no fear. The money is coming in thick and fast. As I always tell you, I'm doing my part, but there's only so much I can do. What's the feedback? Solid?
So the flows have reduced undoubtedly, Nigel. This is the time where people would have taken some money out to invest or spend on consumption. Generally, in festival season, we have seen some amount of redemption to either buy a house or buy a motor car or buy jewelry. And ultimately, wealth is there for spending. So there will be probably similar intensity of gross flows, but the net flows will be lower because of the redemptions for consumption or spending.
That's important, Nilesh. And I know you always call it as you see it. When you saw a month ahead where we were going to cross 43,000 crores, you called it. Now you're saying that there has been some redemption for festive purchases. So just dive a little deeper into that. Last month, we saw flows come down to about 33,000. From 43,000, it came down to net equity inflows, give or take, was around 33. I mean, how are you expecting that number to be now? And that's net equity without counting hybrid. If we add the chunk that comes in from hybrids, and that's becoming a larger chunk, right? Hybrid funds are getting 15, 20,000 crores on a monthly basis now. So then what is the kind of net support expected for the equity market? I mean, this month and going forward?
So I believe there is a higher allocation towards precious metal. And many people don't want to invest in precious metal directly, and which is why they are coming into multi-asset allocation fund. There is also push from fund management industry recommending customers to invest via multi-asset allocation fund. If you are HNI, you will get private banking service, wealth management service. But if you are a retail investor, you don't get this. You don't get those services. In multi-asset allocation fund, India's best fund manager, best asset allocator, divide on your behalf between debt, equity, and precious metal. For example, in our multi-asset allocation fund, we took a call on silver, and to the extent what we could invest in silver, maximum permissible limit, we invested before this rally began. Now, these are the kind of services which customers are liking. Ye Harfan Maula fund hai, fill it, shut it, forget it kind of fund, and which is why they are attracting flows. On a longer term basis, I still believe SIP culture is doing very well. There is fair amount of liquidity waiting for correction. They will get invested when the correction comes. And we expect flows to remain strong. But please remember, we are not here to give exit to FPIs or to promoters. We will do what is right for our unit holders.
Yeah. But by the way, Nilesh bhai, this is a broader question on IPOs and primary market, right? Do you see signs? I mean, and you can only kind of, it's not a specific question on this or that, but do you foresee the music slowing down there? You know, when 60, 70, 80 times subscription doesn't, there's no guarantee that stocks start higher, stocks start lower. Markdowns from private to public, I mean, big ones, some of them. Is the music slowing?
Undoubtedly, Prashant bhai, I believe people will become more and more selective on IPO. They will look at valuation. You don't have to worry about business because SEBI is having a very good gatekeeping. But valuation is something which investor will have to decide on their own. I do believe subscription coming down significantly for expensive IPOs. Gone are the days where you will go to grey market, figure out what the premium is, and then decide how much to invest. I think as the reality bites in, as the myth that in IPO you always make money breaks, my feeling is that investors will become more rational.
Mm-hmm. On that point, Nilesh, and I know this is the critique or, shall I say the debate that's always thrown at fund managers and large asset managers like yourself. And I'm going back to that statement that you're making. Oh, we have visuals from the RBI. That's the big event of the day, which kicks off in the next, I think, half an hour. 10 o'clock, we get the policy announcement and the governor's just gone in. And of course, we have our team. Lata is going to be there. to give us all the action. Actually, okay, no, we've gone on this debate for a goodish bit. Let me change track now, because this debate can go on and on. Whether Indian institutions are giving an exit to all these promoters, all these private equity funds, and all these foreign investors that are, rushing out. Who's right? I think we'll only know in hindsight. Nilesh, sorry, you want to make a point?
Yeah. So whenever we have seen governor is wearing red tie, there is a rate cut. I don't know which color tie governor was wearing today.
Or I missed it. I think we'll go back and check on the feed. But to wrap that up, Nilesh.
Again, that's the myth in the fixed income market. Myths are there in equity as well as fixed income market.
I'm sure our colleagues are checking right outside. I missed it because, I was more focused on your festive colors. You and I think, are matching in festive colors today. But we'll check the governor's tie. Very quickly, speaking of the governor, what expectations? Rate cut today or not?
So it's a 50-50 call. The street is equally divided. But the best outcome will be a dovish language with the carrot of rate cut rather than a rate cut.
All right, Nilesh bhai, we'll leave it there. Thank you very much for joining us. Happy festive greetings to you, and we'll hear from the governor himself. 10 o'clock is the decision, and we'll be on it. Thank you.